And this is not a spring chicken. Today we're going to talk about the GOP conservatives presenting their rescue alternative.
Called, they don't have any money, folks. That's how you phrase it, is they don't have any money, folks. But it's basically...
That's why it's called a bailout.
Yeah, we got the... okay, we got to go... Actually, we've done this twice now. The first time, our equipment shut off on it. So, you know, if it sounds familiar to us, it's because we've done it already. But no, but basically, the conservatives in the House proposed a financial rescue package of tax breaks, which we said before, you didn't hear. If you don't have any job and you don't have any money, you don't get any tax breaks for something that you don't have.
Well, the other part is if you're having liquidity issues, how does having a tax break help you?
It doesn't. But they also, government-sponsored insurance program for mortgage-backed securities is an alternate to Bush's proposed $700 billion bailout. They don't have any money. If they had any money, they wouldn't need a bailout to begin with. So asking them to pay for something with something they don't have is, you know, again, they don't have any money.
Well, and a lot of the challenges is they have the assets, they just don't have the liquidity.
You know, then we come back. Instead of the government buying the toxic mortgage securities, banks, financial firms, and other investors don't have any money, folks. They, holding them would pay premiums to the Treasury to finance the insurance coverage. Once again, they don't have the money to pay for anything. Most of them, they don't.
They're trying to make payroll.
That's right. If you had two nickels to rub together at one time, they'd be stealing that nickels because they don't have any money. Basically, the Democrats have said the idea is unworkable, and Secretary Henry Paulson agrees. They said it's a mortgage insurance approach that does not work. The idea behind the plan is insurance will give investors enough confidence to buy the liquid security to establish a market for them. There is no market for them, and the investors are not putting money into anything. People are selling; they're not buying. In a market like this, if you had money, you buy.
If you have the cash.
Basically, the Republicans say the plan would be to remove the burden of the bailout from taxpayers instead and place it on Wall Street. Well, the problem is that Wall Street has no money. All the liquid assets they have were put into buying bad mortgages.
Well, think about Warren Buffett. I mean, he had $5 billion.
Well, and he made $700 billion yesterday.
Oh,
$700 million because he had cash. But today he probably lost it all because the market is tanking. It's the risk you take. But see, he'll hold on to it because he knows it will be worth something in the long run.
And he can afford to hold on to it.
Yeah. Basically, instead of a purchase scenario where you had the government injecting $700 billion into the markets, you have an insurance plan. In order to get this insurance, the bank with these failed assets would have to pay for the government backing. Once again, Republicans, they haven't got any money. You know,
well, the other part is also if you have to buy insurance because it's kind of like car insurance. If you're high risk, your insurance is really high. Or like try insuring something like jewelry.
And the funds are going broke. So said the institutions holding strong. The plan emerged after a clear consensus that large numbers weren't going to come to the president's plan. Under the House plan, institutions holding stronger assets would pay less premiums for the government backing. Higher risk securities would require higher premiums. Okay, we'll try the old thing again. They don't have any money. If they had any money, they wouldn't need the insurance. Okay, it's the same thing. You know, you lose your job, you can't make the payments on your house. The bank calls you 50 times a day saying, your payment is due, we want it now. And you tell them, I lost my job, I don't have any money. And they call back 10 minutes later, your payment is due, I want the money now, and then I don't have any money. This is the people on Wall Street. We have unbelievable assets. We don't have any money.
That's right. Robert Litton, an expert on banking and finance at the Brookings Institution, called the framework unworkable. And he said everything depends on how you value the security. If you do the deposit insurance scheme, there's nobody out there to know what the right price is.
Well, actually, this is, see that's a zero. That is what that stuff is worth right now.
Well, because, you know, part of it, it's like, what is it? If you have all the assets, you have no liquidity.
And by law, if you can't pay your bills, you have no liquidity. I mean, I once lived in a house worth an ungodly amount of money, didn't have any cash. I was supposedly wealthy. I didn't have any cash. And if you can't, which means the house went to pay the bills. So that's the personal point of view. I didn't have cash. I had a lot of assets, but no cash.
Yeah, it doesn't help you much.
Nope, because you got to be able to transfer the assets into cash, and basically when basically beggars can't be choosy, as they're saying in the world.
And if you can't transfer the assets to cash, you're kind of...
And people that are stuck with real estate cannot transfer that real estate into cash.
But they still owe the money on it.
They still owe the money on it.
So the House Conservatives' plan also would offer temporary tax relief to free up capital by companies to lend to one another.
Okay, no one has any money.
Does that mean you don't owe taxes?
No.
Like instead of you collect the money for sales tax, you don't pay it out?
No.
And give it back to the government?
The government has to have that tax money in order to keep the
for
government
the government running.
That's right. So they basically, and they don't have it because there isn't any out there.
Temporarily suspend dividend payments by financial institutions.
That was done a long time ago on their own.
Require participating firms to disclose to the Treasury Department the value of mortgage assets on their books, private bids on them in the past year, and their last audit report.
Okay, everybody in the world, including a little kid in kindergarten, knows how much bad assets they got. And they're not going to tell people about private bids because it's none of their business, and they're not going to let them have the audit reports because that's also none of their business.
Well, you're sitting pretty if you have your house, you own your house outright.
You're not, because they're going to get it, because you have no cash to pay for the other things that go around the house, like mortgage, insurance. I mean, like
well, if you have, I guess you still have to have money in the bank.
You have to have money in the bank, and not a lot of people have any cash anymore. It's not about assets. It is about cash. Nobody has any cash. I mean, let's think, what am I cash? I think I got.
Okay. That's what happens.
That's cash. That's a dollar. This dollar is more than a lot of the major lending institutions in this nation have. They don't have any cash. I mean, I can reach into my pocket and pull it out. But, as a relative of mine said before, that a lot of the people in this problem don't have two nickels to rub together at the same time.
And that's the challenge.
That's the challenge.
The House Conservatives plan also would
forbid government-sponsored mortgage giants Fannie Mae and Freddie Mac from issuing securities on unsound mortgages. That's why they exist. It means they have no reason for existence after that, because they do these two companies have got the toxic assets because they're investing in things that nobody else would do. And for all of you people's historical thing, this was caused by Bill Clinton and Secretary of the Treasury Rubin. They wanted to make home ownership easier for people that worked at McDonald's.
Oh, is that what the goal was?
That was to make it easier for that little guy making minimum wage to move into a house of his own, because that's the American dream. The problem is it got carried away, and the house prices went astronomical. And then what happened, nobody could foresee it. This is the direct fault of the Democratic Party and no one else. You can lay this one at the foot of Harry Reid and Nancy Pelosi. They started tinkering with the energy situation.
Oh, because the housing issue was bad.
It was bad. It was
because the prime rate was low, so people were doing really low rates.
That's right,
and
but people were still paying it. But what happened was the people were sitting on the top of a swinging gate. They could swing, they could make the payments, swing, we don't make the payments. But when they started threatening the oil companies, the prices of oil skyrocketed, and the gate basically tossed the people off, because they had to make the choice: do we pay for the gas we need to go to work, or do we pay for the house we shouldn't have bought in the first place? Work took precedent over the house, and basically you ended up with people that shouldn't have been buying stuck. The trick is that when you shouldn't buy and you're allowed to buy, it forces the prices up on everybody else. Because
that's right. That's why the pricing houses, or the house of pricing, or the price of housing went so crazy.
Well, I know. Well, put it this way: the house that you don't get to see to our right is worth a good $1 million. It's only worth about $50,000, but because the house next to it is being asked for, they were originally asking for like $1 million. Now they're down to $600,000 because they can't move it. But this is the trick: it forced the guy that was willing to pay the $850,000 working for McDonald's, forced the prices up on everybody else's house, because everybody, like in this area here, got second mortgages on their house.
Well, they were buying housing based on the affordability of the payment.
Yeah.
When you had really low entry rates. It's kind of like buying a car. You got that lease rate, you buy your car for $199.
But everybody knows that the interest rates are going to go up. If you don't get a fixed rate, you have a variable, they're always going to get you. It's historical.
It's historical, but for some of those people that were